Hey, what's up, you guys? And so today I want to talk to you about Jamie Dimon's letter to his shareholders. This happened yesterday. I'm posting this today because I'm reacting to a clip that I saw on CNBC that was very interesting. Now, Jamie Dimon's letter to his shareholders is long. It's the longest probably that he's ever done, and it's mostly because he's getting older, I think. And he just wants to share his heart, his little CEO, multi-billionaire heart. So let's take a look.
Got some breaking news right now. JPMorgan Chase's CEO and Chairman Jamie Dimon's annual letter is out literally just moments ago. In the 66-page letter, Dimon is very optimistic, I should say, about the U.S. economy, at least for the next several years. Here's what he's saying. He's saying this boom could easily run into 2023 because of all of the spending that could extend well into 2023. He then goes on to talk about stocks. He says, while equity valuations are quite high by almost all measures except interest rates, historically a multi-year booming economy could justify their current price. He also goes on to say that QE and deficit spending response to the COVID-19 pandemic is of a completely different magnitude and without some of the offsetting drags that trailed the Great Recession, as he tried to make a differentiation between what's happened now during COVID and what happened back in 2008. Dimon said he sees some froth and speculation in parts of the market, but he didn't specify exactly where. However, he did say, conversely, this boom scenario, it's hard to justify the price of U.S. debt. Most people consider the 10-year bond as the key reference point for U.S. debt. Of course, we show it to you every morning on the screen. He says this is because of two factors. First, the huge supply of debt that needs to be absorbed. And second, the not unreasonable possibility that an increase in inflation will not be just temporary. So two sides of a coin there. Dimon noting extensive competition from Silicon Valley as well. This was actually the most stark thing I actually read it in the report. He effectively says that Silicon Valley is coming to eat the lunch of Wall Street and then talks about the regulatory impact of that. He says banks already compete against a large and powerful shadow banking system, and they're facing extensive competition from Silicon Valley, both in the form of fintechs and big tech companies, Amazon, Apple, Facebook, Google, and now Walmart. He adds Walmart in there for good measure. That is here to stay, he says. As the importance of cloud, AI, and digital platforms grow, this competition will become even more formidable. As a result, he says, banks are playing an increasingly smaller role in the financial system. And then he goes on for several pages to talk about the regulatory impact of that and perhaps how regulators have hamstrung Wall Street in terms of their ability to compete and whether effectively the fintechs in Silicon Valley should be regulated as well. There's a whole other section on climate. Dimon talks about...
So a couple things that stood out to me. One, he seems like he's afraid of fintech and these big tech companies because they're taking more and more and more of the lion's share of the banking system. And he's like basically pouting that it's not fair. Well, sorry, that's how it works. You know, technology moves much, much faster. And these fintech companies are moving so quick, especially the ones that are adapting cryptocurrencies into their systems. I mean, they're going to leave these traditional banks behind, and they're worried, and they should be worried because they're going to, really cause some trouble for these large banking institutions. Now, another thing that I liked, and I also agree that there is going to be a boom in the next 4 years because of all the stimulus, all the money that's being pumped in the system. It worked in 2008, and we didn't see a long recession, and it's going to happen, I believe, again. They just won't. The politicians won't let it happen. They know how to print money. They know that people are going to buy their debt. They know that, other countries have the economic stability to be able to do that. And so they're going to do it. They're going to pump more cash into the system to continue for this to grow. And the fact of the matter is that all these countries that invest in the U.S. through Treasury bonds don't want their asset, which is America, to do bad. So they're going to continue to invest in this country. Because, and another thing, if this country doesn't do well, they're going to suffer. So we are very connected to the world. So I do see this continuing to grow. I do see a boom, an economic boom in the next 2 to 3 years, like Jamie Dimon said in his letter. Another thing that I saw in this video that I agree with is inflation's here to stay. Well, duh. Inflation's been here forever. There hasn't been a year. I think there was only 1 year, and I'll pop up this graph I mentioned before, that there's been inflation every year except for one random year over the past, 15, 20 years. And so it's gonna happen. It's gonna happen. Inflation's not gonna stop. I mean, when you're printing money, inflation is gonna be part of that formula. It's just not gonna be nuts. I don't believe it's gonna be like this crazy inflation, but there's gonna be steady inflation that's gonna happen the next few years. But with a booming economy, it should offset the craziness, any potential craziness that, a lot of these other news places are talking about. Inflation is just gonna break things. It's not. It's gonna happen. It's happened before. It's gonna happen again. Same old story, just different scenario. The letter is really long. There's a lot of parts to it that I'm just not interested in. But I thought this was, especially this clip, I thought out of all the videos that I watched and all the news articles that I read, this is probably one of the ones that I, was intrigued with the most, and I thought I would share with you guys. So hopefully you enjoyed it. You got something out of it. If you're new to this channel, please consider subscribing. Your support would be greatly appreciated. That's all I have for you today, guys. We'll see you in the next one. Bye-bye.